Hello everyone, and very much welcome to this fourth technical webinar of the Inclusive Green Finance Working Group.
Yeah, it's a real pleasure to welcome you for this fourth webinar of the Inclusive Green Finance Working Group that is taking place today. The topic of this webinar is strengthening resilience and innovative solutions for rural populations. And I think this is a very timely occasion that we are using to discuss these topics. I will elaborate on this a little bit further down. Let me first, of course, thank all of you for coming to this webinar. We know that we are all in different time zones, including myself, and it is really great that I can be with you today for the opening of this important event. Now, we are of course aware that many of you face difficulties at home during this crisis, which I think has dramatic impact on many of us. It is a health crisis. It has also become an economic crisis. So I think all of us are struggling, and I can say from the viewpoint from the AFI management unit that we are observing these developments very closely, and of course we see the strong responsibility of the organization as well to come in at this very point in time, and also, have the responsibility to support the members wherever we can to mitigate the impact of this crisis. And as the seminar, I think, will also show, we will definitely have a role to play as AFI members, as regulators, in mitigating the impact of this COVID-19 crisis. So we really recognize your efforts in joining this webinar today. And I think it also speaks a lot about the commitment that you are all showing despite the daunting circumstances that we see at the moment. Now, I should say that we have been growing in this working group quite a bit. I think over the past couple of months since the working group was launched in Kigali, Rwanda, back to back with the Global Policy Forum. I think we have grown from 20 members to now more than 40 members, which means that we have doubled the number of participants, and we have 40 members from 37 countries at this stage. We believe that this crisis that we are going through at the moment, the COVID-19 emergency, is a real reminder of how important the role of the regulators and the policymakers is, really to ensure that the most vulnerable populations have the tools needed to build the resilience to shocks like the one that we are just going through now. I must say that this webinar, of course, gives us a real opportunity to look into very relevant topics, as this is going is really to give a closer look to the impact of climate change, particularly in rural areas. And I think this webinar will give you also the opportunity to learn from the concrete approaches presented today on how those impacts could be mitigated. And the role of the regulator, I think we have discussed this very often, and I do remember, of course, many of our conversations, particularly the one in Kigali, when I think it became very clear that many of you, in fact, confirmed that it is the financial regulator who in many countries has an important role to play when it comes to mitigating the impact of the climate change, and also ensuring that there is resilience among the most vulnerable populations in your countries. Now, coming to the first presentation from the two, I think, as you can witness, the increasing intensity of climate change is altering the rainfall patterns, reducing groundwater reserves, and producing frequent droughts and floods. And intense rains combined with agricultural processes, deforestation and overgrazing exacerbates soil erosion, and this results in less fertile land. And thus, climatic phenomena combined with the processes of environmental degradation weakens the essential ecosystem services for agricultural services, which again undermines the livelihoods of the smallholder farmers. And in this light, we are going to have the first presentation in order really to understand and acquire initiatives for improving productive practices, increasing income and protecting ecosystems, which is crucial since agriculture contributes a significant portion to the GDP of in many of the countries we are working with. Now, our first speaker today is Jacinto Buenfil from Microfinance for ecosystem-based adaptation, and he will share a couple of practical examples and insights on this topic. Likewise, regulators and policymakers are increasingly working with the industry participants from a wide variety of backgrounds to develop appropriate fintech policy and regulatory approaches. And it is really crucial to balance opportunities and risks, and where possible build systems and financial infrastructures that not only perform better from the standpoint of market participants, but also from the standpoint of major regulatory and policy objectives. In this context, the second presentation actually will bring us back to one of the highlights of the last GPF in Kigali, Rwanda in September 2019, when we launched the first showcase for fintech innovators with a goal to advance the dialogue between innovators and regulators. As you remember, 10 finalists were selected, and they presented and pitched their solutions in a plenary session, which was called Reaching the Last Mile, Solutions from the AFI Fintech Showcase at AFI's annual forum. Now, the winner of this fintech showcase was OKO Crop Assurance. So we are very happy to have the second speaker from OKO Crop Assurance today with us, who will in fact give us more background on the solution that was already presented in Kigali. And we are speaking today with Simon Schwall from OKO, who is co-founder and CEO of the organization based in Luxembourg. Now, OKO provides crop insurance to smallholder farmers using satellite imagery and weather forecasting to simplify and automate claim management. It connects a mobile payment platform, weather information providers, and distribution tools, which allows farmers to be compensated instantly when specific thresholds are reached, such as insufficient rainfall or extreme temperature. So we are really looking forward to this second presentation as well. Dear members, the COVID-19 pandemic and the efforts to try to stop the spread of the virus has ironically been resulting in lower levels of greenhouse gases in the atmosphere and reduced material consumption. You can see at the moment there are a couple of media, I think we can quote, who are actually presenting us images, videos, and some other impressions, from all over the world. But we can actually see that there is quite an impact of the COVID-19 crisis on the climate change, which I think in the first place, of course, we also view as a positive effect. Now, we know that these reductions will not be or are not projected to be sustained, and this is a momentary reduction, and it will, of course, not change the other effects of climate change that are already being felt today. It is also a risk that when the economy starts to recover, perhaps starting according to the IMF already in the second half of this year, there will be another increase in greenhouse gases and other harmful emissions. But this crisis, I want to emphasize to the group here, from our point of view, also comes with the opportunity to aim at greening the recovery. It shines a light on and stresses the importance of building resilience for future crises and risks, such as climate change. This can be achieved by investing in a low carbon economy and investing in the well-being and resilience of those who are the most vulnerable. Intensified efforts to advance financial inclusion as well as green investments are a crucial pillar of this resilience building, and we are convinced that the working group through the design, development, and implementation of appropriate policy responses and solutions can make a major contribution towards these objectives. And of course, for the base of the economic pyramid, that means really for the most vulnerable, there are savings and benefits to be gained through a green recovery. This relates to climate smart agriculture, energy efficiency products, and renewable energy sources, but also job creation and investments into resilience building, both socioeconomically and with relation to infrastructure. We hope that this webinar contributes to continue informing and empowering you, all of you, financial policy makers and regulators in the room, increase access and usage of quality financial services for the underserved through formulation, implementation, and global advocacy of sustainable inclusive policies. I would like finally to again thank everyone for the participation in this very, very interesting webinar. Thank you for coming, and of course also to the team in Kuala Lumpur and elsewhere for working very hard in making this webinar happen. Thanks a lot, and I wish you very fruitful deliberations and good outcomes of this webinar. Thanks a lot, and stay safe and healthy. Thank you.
Thank you so much, Alfred, for those opening remarks. Without further ado, I'll now introduce to you the two experts who will be sharing their insights with us here today. Jacinto Buenfil, who's the advisor at the Microfinance for Ecosystem-Based Adaptation, MEbA, and Simon Schwal, who's the co-founder and CEO of OKO Crop Assurance. The first presentation will be shared by Jacinto, and Jacinto has since 2012 worked with UN Environment Program Regional Office for Latin America and the Caribbean, namely managing the project Microfinance for Ecosystem-Based Adaptation, which was initially implemented in Colombia and in Peru, and has now expanded to 7 countries in the LAC region and 2 in the African region. And since 2017, he has also worked as a consultant for the Green Climate Fund, supporting direct access entities in structuring project ideas in water and ecosystems into concept notes and requests for project preparation grants. Jacinto is a true expert in climate adaptation, has, amongst other things, been a co-editor of the book Adaptation to Climate Change Impacts in the Gulf of Mexico's Wetlands, and he's also worked with WWF Mexico for a number of years, as well as worked with the government of Mexico in the design and evaluation of adaptation measures and policies at the national level. He will be sharing a presentation with us about strengthening the resilience of rural populations, microloans for reducing the vulnerability of small agricultural producers to climate risks. Please, Jacinto, the floor is yours.
Hi, can you hear me?
Yes, we can hear you now, Jacinto.
Thank you. Sorry for that. I had a little issue. Okay, let's see if you can see me now. All right, so thank you very much for the introduction, and apologies for the quick delay. I'm Jacinto Buenfil. I'm the manager of a project called Microfinance for Ecosystem-Based Adaptation, and I'm truly honored to be in this very interesting webinar, and thank you, Afi, for this invitation to show what we have been doing thus far. So the objective of this project is also an EQ project, and the idea is to work with microfinance institutions so that we bring capacity in these institutions and that they can in turn deliver autonomously microloans that are geared towards ecosystem-based adaptation. And when we talk about ecosystem-based adaptation, basically it means how do we use nature in an efficient manner so that it can help us as humans to adapt to climate change. And the idea then is that microfinance institutions work with vulnerable populations already. And when we're talking about climate change adaptation, we want to reduce vulnerability. So they are very key in terms of delivering resources, financial resources, and reducing the finance gap in adaptation. So we work with, we started working in 2012. In the first phase of the project, we worked with 3 microfinance institutions in Colombia and 2 in Peru. And then in the phase 2 of the project, we moved to a scaling up approach. And now we're dealing with 9 partner institutions. And we have already expanded our reach to many countries in Latin America and the Caribbean. So Colombia, Ecuador, Dominican Republic, Costa Rica, and El Salvador. And we're also reaching out to Africa, where I see that there's a lot of potential for these types of solutions in Senegal and Benin. Our implementing partner is Yapu Solutions, and I work for UN Environment. So let's move into the other, to the next slide, please. This is the whole approach of the project. When we first started this project, I always joke that it was like an arranged marriage where you know, the 2 partners don't really know each other, but they have to live together, and they try to get to understand each other. So this is basically what we tried to do. And when we talked about climate change adaptation to our colleagues in the financial sector, they really did not understand a lot what we were meaning, especially when we talk about ecosystem-based adaptation. And when we talked, myself coming from that adaptation sector, when I was trying to understand all of the financial aspects and the difficulties that microfinance institutions have in delivering their solutions to vulnerable populations, it was also quite difficult for us. So basically, we tried to establish this language and understand that it is very important for a sustainable finance sector to have sustainable ecosystems, and for the sustainable ecosystems and rural populations and vulnerable populations to have a good livelihoods, they need to both take care of the environment and also have access to finance and other products and services that would allow them to de-risk and reduce basically the risk of investing in agriculture. So we know that climate change is affecting severely the rural sector, and is affecting severely food production. But also food production is a driver of change in ecosystems. It's a polluter at times, and it's also a major deforestation component, expanding the agricultural frontier. So if we work together in terms of driving the types of investments towards more sustainable types of investments, then we can have a very strong impact in the agricultural sector. And on the other hand, if we drive sustainable investments in the agricultural sector, we have the chance of making agriculture more resilient, less vulnerable to changes in climate, and that entails more resilient, how do you call them, more resilient investments for the financial sector, and the clients would be, the client base would be more resilient, and the whole portfolio would be more resilient. Can we go into the next one, please? So these are the spheres of action of the project. Basically, we work with many different stakeholders, and I'm very glad to be talking now to regulators, which is basically the top left on your screen is we placed it as government based. Basically, we're trying to have this enabling environment that allows us to promote these types of policies. Our focus is mainly through microfinance institutions, but we also try to work with governments and regulators in trying to establish a key role for microfinancing in general as a key driver of change and as a key promoter of sustainable adaptation practices. So let me go one by one and sort of get into the details of what we do. So we start, our main stakeholders are microfinance institutions on the top, on the bottom right of the screen. These are our natural partners. So microfinance institutions are the ones that deliver the micro loans to the vulnerable populations, and then we build capacity in these institutions so that they can better manage the risks, they can better manage the information, because when we're talking about climate change, we know that we need a lot of information, we need a lot of data. So we help them to develop the systems that would allow them to use data in a much more efficient way. For example, by mapping and by using climate scenarios and including variables of climate change into their decision-making process in their credit assessment. And then we build these tools that the MFIs can use also in terms of selecting the types of options that they can offer in products and services to vulnerable populations, and to develop capacity building materials and awareness raising materials that they can promote through marketing approaches and such. We know that microfinance institutions are in the business of lending. So a lot of times they don't want to get involved in the technical aspects. And if they say, okay, to a farmer, you need to invest in potatoes or coffee, and something goes wrong, then the farmer is not going to pay them back. So we try for the institutions to develop these partnerships with technical institutions so that these technical institutions can provide support to farmers in improving their practices and in ensuring that the solutions that are embedded in credits are correctly implemented. Then we move to the left in the middle of the screen, and the farmers. So those are our small scale farmers are the target of these microfinance institutions. And like I said, these are usually people that are vulnerable, that don't have access to many services, including financial services. And that's why the role of the institutions are key, so that financial inclusion is delivered, but in a way that changes the way practices are carried out in rural areas, and that sustainability and environmental protection is taken into account. So if we move then to the government side, that's where regulators could come in. We know that microfinancing is really has high rates, right? We know that operation costs are very, very high. So the way that we can work with governments is and regulators is in several aspects. For example, in trying to drive policy that embeds ecosystem-based adaptation or nature-based solutions, however you want to call it, as part of the climate change policies, and that becomes part of NDCs and these other commitments that they do in international scenarios. It can also be in terms of the regulation, how to work with the microfinance sector to ensure that the people that are the most vulnerable don't start paying the highest rates for the adaptation process. And to ensure that there is an enabling environment so that the microfinancing sector can be seen as this partner in driving change, driving adaptation processes, but also reducing the adaptation finance gap, which we know that public money is not going to be enough to deliver solutions to all of the populations. And then when we're talking about welcoming partnerships with the private sector, that would reduce the load on the government's side, and will also allow for governments to deliver the strategies that they plan for, and all these plans and ideas that usually don't land into the territory and don't land with the vulnerable populations, and because you need money for that. And then in the end, we also work with development finance institutions, impact investment managers, to the right and top of the screen. And that means trying to develop credit lines, trying to develop investment portfolios that are targeted to ecosystem-based adaptation or nature-based solutions. And this means that if eventually we have enough partnerships with microfinance institutions that are capable of delivering these types of lending processes, that they should be rewarded for that and have a lower rate for their financing, and this can then be transferred to the vulnerable farmer. And in the end, what we want is ecosystems to be healthy, that they can provide the services that rural populations need in order to maintain their livelihoods. Can we go into the next one, please? So these are just very quickly some of the results. Basically, throughout these years, we have delivered more than 13,000 loans through the microfinance institutions. That represent about $18.5 million. So if you think I didn't go over this, but the project is basically a €5 million project. So if you look at about the money that has been invested and the money that has been delivered, it's basically a 3-to-1 ratio, and this can be increased significantly. Once the institutions have the capacity to deliver the loans, then they can actually keep doing this forever. That's because it becomes part of their business processes. We are very keen into, through the microfinance institutions and their partners, delivering technical assistance to farmers. So we have, for example, developed EVA demonstration farms. So we have about 7 demonstration farms already implemented, and these are places where there's both marketing approaches in terms of trying to promote additional loans, but at the same time, there are capacity building spaces where farmers can have some idea of what it means to deliver or implement an adaptation solution. We have identified about 40 ecosystem-based adaptation solutions. I'll go into that a bit later. And out of those, 22 are embedded in financial products and services. So far, we have about 14, we have exactly 14 microfinance institutions that are adopting the tools that have been developed by the project. And we have established several dialogues, and my participation here is one of those. And we are also trying to develop additional proposals, both to the Green Climate Fund and the Global Environment Facility, so that we can upscale this idea both in Colombia and in Central America. And we're also trying to find something to do additionally in Africa. And like I said, we developed these ideas with development finance institutions that can deliver credit lines, and we're in the process of doing that with Bancoldex, our partner in Colombia, and also through the Green Climate Fund. Can we go to the next one, please? Okay, so these are some of the tools that we have developed. So if you go into the center of the screen on the top, you have the catalog of the solutions that have been developed, and sort of the main ideas and concepts of the project, and how microfinancing can support ecosystem-based adaptation. So in the left catalog, you have all of the 40 solutions, and in the right, all of the concepts. If you go to the bottom left, you can see an economic game that has been produced. And you can, all of these publications, download them on the website. And I hope you can share the website. It has a lot of material, both in English, Spanish, and French. We have just launched it, so I hope you find it useful. So we have this economic game that is allowing sensibilization, awareness raising processes for farmers, and to ensure that they understand what climate change is and what adaptation can do to them, to their production in a joyful way. We have developed a program to build capacity in the institutions, where we talk about all of the issues on climate change. What is climate change? What is adaptation? What is ecosystem-based adaptation? What is green financing? And how to manage risks sustainably in the institution. We do this all through a software that is implemented by Yahoo. So the institutions really paper and pencil and Excel files to digitization and using tablets and such to really handle information in a much more efficient way. And so we first go into the institution, we assess what it needs in order to implement green financing. And then from there, we move into developing the strategy and implementing through a pilot. And then we have developed a couple of tools that are quite interesting in terms of evaluating the capacity of farmers on the onset through an index that basically goes through the three areas of sustainability: social, environmental, and economic areas. And then we have capacity in terms of delivering or implementing ecosystem-based adaptation. And then if the institutions use this type of tool, they can then have very strong impact or understanding of their impact in people's livelihoods. And for example, a verification tool, it's on the top left, that allows institutions and partners to see if a solution has been correctly delivered. Can we go into the next one, please? So we've been talking about ecosystem-based adaptation, and just to give you an idea of what types of solutions we're talking about. So we're based on ecological agriculture or agroecology and permaculture, which is permanent agriculture. So those are our principles. And the idea is, how do we expand those principles into the types of solutions that we promote through financial products and services? So some solutions are dealing with agricultural support, basically organic fertilizers, soil conditioning, reservoirs, drainage systems that allow for agriculture to be productive. Then we have ecological support, for example, beekeeping and these types of solutions that allow for the whole ecosystem to be sustained in its processes, the service to be delivered to rural populations. So sustainable forest management, filtering dams and seed banks. And some of these have not been implemented in products, and others have been very successful at being implemented in financial products. For example, technological solutions, resilient technology is very important in terms of delivering increased capacity to produce and increase revenue. And so efficient irrigation, solar dehydrators, solar hydroponics, and greenhouses are or aquaculture. And agricultural practices such as organic agriculture and diversification of crops and rotation and sustainable pest management or nutrient management, for example, and also conservation agriculture. I think the key message here is that in the face of uncertainty in terms of climate and situations like COVID and stuff, the farmers need to really expand their capacity in terms of production, but also in diversifying income so that does not if they're producing several different things at once. Can we go into the next one, please? All right, so some lessons learned from the project is basically we understand that this is a way to decrease the adaptation financing gap for governments and also to deliver very key solutions, very practical solutions on the ground for the people that need it the most. We also understand that the rates are quite high, and we know that these rates come from basically three factors: the financing that the institution has to pay, the operational costs, and also the risk associated to investing in agriculture. So if we have farmers that are implementing sustainable adaptation approaches, they should be less risky on climate change. So they should be rewarded. If we have entities that can access dedicated credit lines at a better condition, they should be reducing their financing costs. And if we have entities that can manage information much more efficiently, manage their risk much more efficiently, then they should be able to reduce operational costs. So we should be able to, in the end, reduce the rates that in the end the farmers pay for these microloans. And that's the whole purpose of the project. And I think we still need to work on that, and we need the support of regulators on that issue. We have developed these tools that have been already tested in 12 institutions, are currently being tested in additional ones. It has been very well received, and I should mention that institutions pay a third in this MEbA 2 approach. They pay a third of the in co-financing of delivering the technical assistance. And this means that it's very much wanted, it's very much needed, and it's a business opportunity that institutions see, because they understand that most institutions work in commercial and urban areas, and now they need to migrate to the rural areas in order to keep their business going. So it's a key opportunity, and with these tools, they can actually implement methodologies that are adequate for working with rural areas, and specifically with agricultural sector and smallholder farmers. And finally, technical assistance is quite important, both for the financial institutions and for the farmers. So technical assistance is key to deliver the solutions and the tools to institutions so they can autonomously promote these types of loans, but also to farmers so that they can understand what sustainability means, how climate change can affect their production, and starting to implement both improved agricultural practices, but also climate resilient technology. I think that's the last slide. So I'll leave it at that. If you have any questions, I'll be happy to answer. Thank you.
Yes, thank you so much, Jacinto, for that interesting presentation, as well as sharing the lessons learned. I assume these are mostly based on the work you did in Peru and Colombia. If there's any specific questions to Jacinto, please, if you can submit them through the questions and answer box at the bottom of the screen, and then we'll take questions both to Jacinto and Simon at the end of this session. So with that very smooth transition, it's a great pleasure to welcome Simon Schwal, the next technical expert, who's the CEO and co-founder of OKO Crop Assurance. And Simon is an entrepreneur and a micro-insurance expert. And he gathered initial experience in the field working for 4 years for BIMA, which quickly became a leading micro-insurance company in emerging markets, thanks to its unique mobile-based solution with 31 million people reached. Simon has created OKO, which brings parametric crop insurance to smallholder farmers in Africa. OKO is now active in Mali and in Uganda, and established major partnership with Orange and Alliance. It is listed as one of the top 100 fintechs globally by KPMG, and one of the 12 most promising startups in Africa by DISTRIBUTOR. So Simon will indeed be sharing the latest work by OKO Crop Assurance, and also share with us some innovative solutions for insurance policy management and insurance distribution to remote areas to unbanked farmers. So please, Simon.
Hi, everyone. Can you all hear me?
Yes. Yeah, all
yes.
works well.
Great. So thank you, everyone, for bearing with us. I know it's difficult to focus a long time on a webinar, so I'll try to be as dynamic as possible and keep it to 15 minutes so that we have time for question and answers. So if you can move to the next slide. Yeah, so I will do two things during this presentation. I will present what we do at OKO, what the OKO is providing as a service and how we do it. And then I will present a bit of the journey we had in terms of regulatory approval, and finish with advice on how regulators can help startups like OKO to launch more easily in their markets. So we can move to the next slide. So it all starts with a problem. What I observed when working in Papua New Guinea, for example, is that the majority of the population works in agriculture or has some revenue income coming from agriculture, but very few people have insurance. The reason for that is that the cost of operating insurance is too high compared to what farmers can afford. For this, you need to look at the cost structure of an insurance product. When you're an insurance company, you need to cover the cost of climate risk. That's the bottom part here. You also, if you don't have enough data and you cannot be sure of your calculations, then you also need to inflate this by the cost of uncertainty. And finally, you need to bring this insurance to people. So you need to have administrative costs for sending someone on site, making a quote, sending someone again at the end of the season to verify the extent of the damages and calculate the claim amount. So that's a lot of money also to add on top of the cost of risk. Altogether, this it becomes too high for a small plot of land isolated in rural areas. So what we do is we use technology to reduce these two top bricks of costs and bring down the cost of insurance to a level that is bearable for smallholder farmers. You can move to the next slide. So we use technology to do so. We use, as was mentioned in my introduction, we use satellite data to understand what's happening on the ground. And we use big data to match the weather conditions to the loss of yield. So basically, we then apply this to index insurance. And how does it work? It's quite simple. Only 3 steps. First, farmers use their phone to register for insurance by telling us what is the crop size, the crop type, the field size, and the location. They receive a quote for insurance that is personalized to this information that they gave to us. And then they can pay this insurance with their phone using mobile money. Meaning that in a few minutes, farmers have talked to someone who explained to them what was insurance, have registered, and then have paid without having to leave the field and without having to have a bank account or go to a teller. So that's the first step. And then what we do at OKO is we monitor the weather remotely for that area where the farmer is located. We use satellite data, and then there are only 2 possible outcomes. Either it was a good season, and that's the lower arrow here, meaning that farmers can enjoy the harvests that they created, or there was a flood or a drought, and that's the higher part here. And in that case, if we identify that there was a drought or a flood in the area, farmers automatically receive a compensation on their mobile phone with no delay. They don't have to wait for an inspector to come on site and verify what happened. Everything is immediate and transparent because we rely on satellite data. Next slide. Yeah. So we are not an insurance company. I'm making this clear upfront because I'm talking here to regulators. We are positioned as a distributor. So we create the insurance product, we design it, but then we bring it to a local insurer who has a license to operate and to sell insurance products in the country. But then we take over, we do all the distribution, the premium collection, we create a user interface and we keep the customers engaged during the season. We do the claim validation and the claim settlement, which means that for an insurance company that wants to launch crop insurance in the market, they don't need to invest in a new technology or a new team. We can just bring everything to them. As long as they agree to carry the risk, then we can do all the operational parts. We obtained the license to act as an insurance agent in Mali. And actually, yeah, you can stay on this slide. What has been our results so far? What is our traction? So we did some pilots last year. We had 450 farmers insured. We obtained our license as an insurance agent and we signed partnerships. Since then, we launched now on the 21st of January this year. And since then, we've seen a very strong growth week on week. We've had 4,000 registered customers in 2 months. More than 1,000 of them have paid their premium, already. And we've set up a system where customers can ask for a callback to have more information or to register, because we know that a lot of them are illiterate. So that way they just have to click one button to receive a callback in their language. And this has been very successful with more than 20,000 callback requests in only 2 months. Next slide, yeah. And Jacinto, just before me, explained how important it is to reduce the rate for loans given to farmers. So here it will create a nice transition from what he said. We created a partnership with Baobab, a microfinance institution in West Africa, which means that farmers who are insured with us can obtain a loan without having to bring any collateral. They can use the insurance as a collateral, which facilitates greatly the access to loans for these farmers. This is the first step. We hope that we can prove that the risk is decreased well enough for the institutions to also reduce the rate that they apply on these products. But we know that the farmers need to have access to finance, and that today there are a lot of obstacles to obtain a loan, and we're trying to lift these obstacles with insurance. Next slide. Okay, so that was about what we are doing and our results so far. Now I wanted to focus a bit during this call on what has been our journey from a regulatory standpoint. So what we started with was doing a market validation. So there we collaborated with an NGO. There was an insurance product that was available, but it was not really what we designed. So it helped us because we didn't have to set up a local entity and we didn't need a license, but we had many limitations. Then we moved to, I'm listing them here. Then we moved to a piloting stage where we registered our own entity locally in Mali, and but we still didn't have an insurance agent license. So we were still, we were actually signing a group policy contract with the insurer and onboarding farmers to our contract. But it also meant that we couldn't really scale because we didn't really have a license to operate as an agent. Next step, we moved to a commercial launch, and for this we needed to be registered as an agent or a broker. It made the model more viable because we then could take agent commission and we had the ability to scale up. The problem is that we couldn't do this upfront because it's a lengthy process, and yeah, for a startup it means spending 6 months, maybe more, to apply, to set up the entity, to have all the paperwork ready to operate as an agent. And then in the future, what we could do is also obtain a micro insurance license that are available in now many countries. It gives us more flexibility and more a higher speed to market when we need to have new products approved, but it requires also a higher capital and for us to build a more senior team in order to obtain this license. So you can see that from the beginning to the end, there are different options. We try to always stay within all the regulation while progressing to be able to bring the product to the market. So we now operate in Mali commercially and in Uganda as a pilot. I wanted to show here what was our experience dealing with the regulation and the environment in general. So in Mali, there was no scheme about crop insurance whatsoever. So it means that we needed to obtain a ruling for new products to be, for index insurance to be approved, but luckily there was already such products that were available, and they agreed not to extend this ruling to our products as well. In Uganda, there is an index insurance that is designed, that has been commissioned by the state. So we could just use an existing index insurance product to start with at least. Then when it comes to taxes and subsidies, in Mali, there is quite a high tax, 20% tax, which is higher than VAT on insurance, which is a very strong obstacle because insurance, this kind of insurance product, we try to make them as cheap as possible, but then this tax is making them more expensive and more difficult to afford for the farmers. In Uganda, the crop insurance is subsidized by the state up to 80%, depending on the area where the farmers are and depending on the size of their farms. So it made it much easier to bring crop insurance to farmers if they don't have to pay the full price, of course. And finally, in terms of competition, there is not much competition in Mali because there are not many solutions available. But in Uganda, because things are made easier with the two things that I mentioned before, there is, so first the insurers, they're all under one consortium. So there is kind of a co-petition there, the collaboration between competitors. And there are now several innovative approaches that are competing to bring more farmers to insurance. So this is to show that there are steps that regulators can take to make insurance easier to launch, easier to distribute, and also more affordable for farmers. And it can start with just lower taxes on this kind of products. And this is my final slide. So I wanted to give suggestions on how you as regulators can help solve some of the problems that we faced so that more startups like us can bring innovative solutions to this very exposed population. So first, regulation can be intimidating for a small company like us. We don't have a big legal team and we don't want to be exposed to liabilities and to risks. So initially we had to operate kind of under the radar. So at a small scale in partnership with NGOs, just to test the market. And we didn't want to make too much waves by fear that we would be required to very early have the license that we couldn't afford. So what can help in this situation to allow for innovation while keeping everything regulated is to create a regulatory sandbox. So it's a controlled environment where startups can test new products at a very limited scale without having to worry about being outside of the regulatory framework. So that's something I would encourage any regulator to set up. So for example, giving the ability for a new company to provide insurance as long as it has been at least reviewed by the regulator, which is a quick review at a small scale, and just give visibility on what they do so that there's no excess, there's no breach of the confidence that the customers can have, but also there is no fear from the innovators that they are doing something against the regulation. Second, there are some markets where there is no clarity on index insurance. For example, we're trying to work with insurance companies in South Africa, but most insurance companies believe it's not allowed to operate index insurance. So I don't know if that's correct or not, if that could be changed by discussing to the regulators. But this is a new kind of product that makes it much easier for insurance companies to serve the underserved populations. So I think it's quite important for regulators to officially state through an appendix or a statement what is their position in regards to index insurance. That way, insurance companies can create new kinds of products together with the regulators and not have this kind of, not be in this gray area where they don't know if they can do it or not. And lastly, I would encourage to issue specific requirement for microinsurance. So no, basically, the problem that we face is that in Ivory Coast, there is a microinsurance license, but our insurers that already have a full-fledged insurance license, they need to apply again to have a microinsurance license. So only 2 insurances, as far as I know, have applied to this microinsurance license. And this means that these microinsurance products that could help the vulnerable populations are not very common. So here my recommendation as an entrepreneur would be that to allow insurance companies who already have a full-fledged license to also offer index insurance and microinsurance products with no additional requirements, because it's an additional barrier for something that they could be able to do quicker because they already have all the expertise and all the means. So these are the three points that I would like you to remember from this presentation. Of course, I'm speaking from an innovator or a private sector point of view. So I don't know if all of this is possible, if maybe some of this is already in place, but I'm not aware of this. But yeah, that's the message I wanted to convey through this presentation. Thank you very much for your attention.
Thank you very much, Simon. Great to hear what you are up to, but also much appreciated that you package some of the challenges you've been up against, as well as a couple of suggestions to the regulators taking part in this webinar. I think this is very helpful.
Thank you. And if I can add something, if some regulators would like to know more, if they would like us to come and pilot something in their markets, please get in touch. we would be very happy to enter new markets with the support of the regulators.
Very good. Thank you, Simon. We're now moving to the question and answer session. So if you have any questions to either Simon or Jacinto, or reflections that you want to share, feel free to either share it in the Q&A box or just to raise your hand in the chat function, and then we'll give you the floor. We already received one question, and I'm very happy to see that Jacinto already also answered the question, but just for the sake of making sure everybody can hear the question and the answer, we'll take it live here in the webinar as well. So if I can invite Naida Pires, who's from Banco Central de Sao Tomé y Príncipe, to ask the question to Jacinto, please.
Hello?
Yes, we can hear you.
Yes? Okay, so thank you very much, Joanna, and thank you for both presentations. My question regards the issue of credit granting, because in my country we have a big issue with the rates for credit granting, and it is particularly concerning on the agricultural sector. So I would like to know the opinion of Jacinto. He already told me his point about how we can deal with the problem of lack of guarantees or insufficiency of credit guarantees for the agricultural sector.
Yes, thank you very much, Naida. And before, maybe we just give over to Jacinto to answer directly, and then we jump into the next question. Thank you.
Okay.
Yeah, thanks. So basically, I'm not an expert, I must say. So my insight would be, I know that there has been guarantees being used in Mexico, for example, through PETA, in which they were trying to promote conservation agriculture. And the interesting thing is that when they basically was for maize production, and they said, okay, if you don't get your usual production, then that would kick in the guarantee. And the interesting thing is it was never even used. So I think there is a lot of opportunity and market to use these types of financial mechanisms. And what I propose is that we work with development finance institutions, impact investment managers, that in order to lower the risk of investing in the agricultural sector as part of their investment processes or as part of the credit lines, they can also add guarantees as part of the de-risking scheme. And I think with the use of data, climate scenarios, and also what Simon was talking about, insurance is very important, then that should be able to de-risk overall in agricultural investment, and that should provide an increased market for this. What should be said is that guarantees are mainly for financial institutions, and we also need to ensure that the farmers are insured, right? So I think it needs to be coupled with different types of mechanisms in order to provide access and de-risking mechanisms.
Yeah. Okay.
Okay, thank you very much.
That's what much I can say. So over to you, Joanna.
Yes, maybe just to bring one example. Also, I don't know if anybody from Bank of Ghana is here today. I believe maybe not, because Gladys was not able to join, unfortunately. But they also have a quite interesting example of credit guarantee system for the agriculture sector. So that's it's called Girsal, and it's something that's shared also in the landscape report. So it might be something that that can be interesting for you to look into. Then we received another question in the Q&A box, but I would ask Boubacar Diallo to share the question, but I can see now in the participants list that we have 4 or 5 people with this name, and it's because of the links and the way it's been shared. So I'll just take the liberty of reading this question out loud, and it's for Simon. So what are the unwanted events or reference indexes used to trigger claim of damage from the insurance company? and how was the experience to this, and how profitable was it for the insurance company and the insured? So if you can share some more insights about this, that would be really great.
Yes, so we use rainfall to trigger the payment or not of a claim. Basically, we defined triggers for excessive or insufficient rainfall during the season. And if this, we've set up these triggers with the help of historical data to understand under which conditions the yield has been affected. So that's how we set it up. For the insurance company, the profitability is actually, it's a bit early to say how profitable it is, but there is not much a risk to make losses because the weather data is very well known. We have 25 years of historical weather data. So it's not something that is too risky to insure. There is data to back it up. They calculate a small margin, I think of 15% or in terms of payout ratio to be profitable with this business. So there's not too much of a risk for the insurance companies to lose money, at least in the long run. And then for the farmers, so as all insurance products, it pays less than it receives because the insurance company needs to be profitable with these products. But we've already paid some claims. The claimants were really happy because it indeed helped them in the time of need. It helped them to bridge the gap to the next season by starting a new activity or buying inputs for the next season with this money. So it's also a bit difficult to understand how profitable it is for the farmers. It's eventually it should not be kind of profitable like if with every insurance product you pay for a service and you don't get more paid than what you pay in claims in premiums in the long term. But what we want to show is that once farmers have insurance, they can unlock loans and then grow more and increase their financial income over the years with no big gaps or big dives in terms of revenues, which because usually in this kind of situation, they have to sell their assets or borrow money at a very bad rate. So we believe we can make a smoother path to financial growth for these farmers. And that's what we are trying to prove. But this will take a few seasons, a few years. So it's difficult for now to say.
Thank you very much, Simon. I can now clarify that that question came from Iqbal Hossain from the Bangladesh Bank. There was some problems with the namings in the chat. Are there any additional questions to Simon? Oh, sorry. Are there any additional questions to Simon or Jacinto? Please just raise your hand or type the question. I'll give a couple of, a little bit of time to see if there's anybody else who have any questions. See no additional questions for now. So with this, a really big thank you to Simon and Jacinto for taking part. I think this was a quite new, interesting perspective also to our work on inclusive green finance, being a lot more concrete, coming from the experiences either working with the insurance companies and the claimants, as well as directly with the MFIs. And I think also, as the executive director pointed out earlier, especially in these times, resilience building of the most vulnerable populations is of utmost importance. And going forward, I believe there will be a lot of considerations for these kind of policies as well. So thank you so much for sharing your insights and your work in this area. It's much appreciated. And for all participants as well, if you at any point have questions to either Jacinto or Simon, please be in touch with us and we can relay that forward as well. As with the other webinars, we will be sharing a recording of this webinar as well as the presentations in a couple of days' time. So with that, thank you so much. A big silent round of applause to our to our panelists, to Jacinto, to Simon. Thank you very much to Emmanuel and Lorraine for helping us out with the translation. Thank you to all the attendees. It was great meeting you all again, and we will be in touch over email with the next steps and the work with the subgroups. And it's a big thank you also to the rest of the AFI team who helped with this webinar. So thank you. Have a great evening, morning, day ahead of you, and stay safe.